Out in the Wawa Mountains in Utah, a major energy breakthrough has just been discovered. This energy breakthrough will be bigger than Bitcoin, bigger than gold, and even bigger than AI. And early buyers into this breakthrough could become obscenely rich. This is the pitch from Garrett Baldwin of Stansberry Research. I reveal the stock he's talking about so you don't have to buy this newsletter. Before we do anything, let's look at some past publicly available stock picks from this newsletter to see if it's trustworthy. In March 2022, Stansberry gave an all-in buy alert for Sandstorm Gold, claiming it was the best gold stock of 2022. The stock languished for a few years, but with gold prices going crazy, it has surged lately. They recommended Sandstorm again in 2023 and called it the #1 gold stock of 2023. This was a much better time to buy. Guess what stock was Stansberry's #1 gold stock in 2024? You guessed it, Sandstorm Gold, and this was the best time to buy as the stock shot up pretty quickly after being recommended. In August 2024, 3 nuclear stocks were recommended, and the first was BWX Technologies. This stock is up so far. The next stock was Constellation Energy, and this was a good stock pick, and it's up overall. Vistra was the last nuclear stock recommended, and it's performed the best, doubling in under a year. In October 2024, Stansberry put out a teaser for their favorite gold stock of 2025, and it was once again Sandstorm, and the stock has done well since. There's a few different stocks to uncover, so we're just going to jump into things now. This presentation is about geothermal, and all the stocks have to do with that. Geothermal energy is a form of renewable energy that harnesses heat from within the earth to generate electricity or provide direct heating. Here's the clues for the first stock. For instance, one stock I've found is already operating 2 major geothermal power plants. It just signed a huge deal to supply energy to the state of California for the next 10 years. And that's likely just the beginning of a much bigger move. This company just bought up 1,678 acres of geothermal leases out here in Utah. It's right at the heart of everything I've been telling you about. This is Ormat Technologies, and the ticker is ORA. Ormat Technologies is one of the most popular geothermal companies out there, and one I've covered a couple times on this channel in the past. They design, build, and operate geothermal energy facilities globally, and are a pure geothermal play. I personally would pass on this stock, and here's why. First is flatlining profits despite revenue growth. Ormat reported a 6.1% increase in total revenues for full year 2024 compared to 2023. However, net income remained flat year over year, indicating that rising revenues aren't translating into higher profits. Second is declining revenue in key segments. In the third quarter of 2024, Ormat's product segment revenues decreased by 6.2%, and the energy storage segment saw an 11.1% year-over-year decline. These drops raise concerns about the company's growth in critical areas. Third is high valuation with modest growth. Ormat's stock trades at a price-to-earnings (PE) ratio of 32.71, which is considered high, especially when the company's earnings growth is modest. This valuation may not be justified given the current financial performance. Fourth is analyst consensus. Hold. Analysts have given Ormat a consensus rating of hold with an average price target of $83.71. This suggests limited upside potential in the near term. Fifth is high debt levels for a renewable player. Ormat carries a significant amount of debt with over $2 billion in long-term obligations. This heavy debt load can limit financial flexibility, increase interest expenses, and reduce the company's ability to invest in growth opportunities, especially if interest rates remain high. I'm going to reveal the rest of the stocks in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out AlphaPicks. I reviewed over 100 stock picking services, and AlphaPicks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off AlphaPicks. So go ahead and click that link and take advantage of this amazing deal. Here's the clues for the second stock. Another firm I've found for you is just as exciting. It has already signed a deal with Amazon to supply the company with power for data centers. And even more compelling, it has been selected by the U.S. Army to supply geothermal energy to military bases all over America. This is GE Vernova, and the ticker is GEV. GE Vernova is the energy business of General Electric, focused on providing technology and services for power generation, transmission, and renewable energy, including wind, gas, nuclear, and grid solutions. GE Vernova is a great company, but it's probably too expensive to buy at the moment, and you should probably wait for a dip. Here's what to know about the stock. First is green energy tailwind. GE Vernova is positioned to benefit from the ongoing transition to renewable energy, with strong exposure to wind, solar, and hydrogen technologies. but it still faces stiff competition and high capital costs. Second is Powerhouse and Grid Solutions. With a significant market share in grid infrastructure, Vernova plays a critical role in the global push for electrification, but its profitability remains tightly linked to broader economic cycles. Third is heavy R&D investment. GE Vernova continues to pour resources into cutting-edge energy technology, including next-gen wind turbines and advanced grid software, but the long payback periods and uncertain regulatory landscape add risk. Fourth is massive installed base. With decades of experience and a massive installed base of energy assets, GE Vernova has a competitive advantage in maintenance and service contracts, yet this aging fleet also requires costly upgrades. Fifth is debt burden and financial pressure. While GE Vernova has the potential for growth, it still carries significant financial pressures from GE's broader balance sheet, making it a risky bet if the renewable market doesn't expand as quickly as expected. There's only one clue about the last stock, and it is another firm I've found has already been approached by BlackRock to power a huge new data center. This could be a few different stocks, but if I had to guess, it would be Chevron, ticker CVX. First is Dividend Dynamo, 37 years of growth. Chevron boasts a remarkable track record with 37 consecutive years of dividend increases. As of May 2025, it offers a robust 4.2% yield, making it a reliable choice for income-focused investors. Second is Strategic Shift, prioritizing free cash flow. In 2025, Chevron is optimizing its capital allocation by reducing spending to $14.5 to $15.5 billion, focusing on high-return projects like deepwater operations in the Gulf of Mexico. This strategy aims to enhance free cash flow and shareholder returns. Third is global diversification, a resilient portfolio. Chevron's diversified operations span upstream, midstream, and downstream segments across various regions, including the US, Kazakhstan, and Australia. This global presence provides stability and mitigates regional risks. Fourth is analyst confidence, upgrades and price targets. Analysts are bullish on Chevron, with Citi upgrading the stock and setting a price target of $185, citing potential catalysts like exploration in Namibia. The average 12-month price target stands at $161.25, indicating potential upside. Fifth is Hess acquisition, unlocking future growth. Chevron's planned $53 billion acquisition of Hess is poised to enhance its asset base, particularly in the Bakken region and the Gulf of Mexico. Despite ongoing arbitration with ExxonMobil, the deal is expected to significantly boost free cash flow by 2027. And make sure to click the link in the description to check out Alpha Picks and get $50 off this amazing stock picking service.